Well, you look a lot better this time. You had a black eye last time we talked to you.
Yeah, I got a lot of social media comment. It seems that the more conspiratorial of the viewers thought I got visited by the Trilateral Commission or something like that.
Yeah, yeah.
In,
Yeah, it
in
was pretty
truth,
funny.
in truth,
Ivan,
I'm
are
just
you already recording? I want to use that.
Oh yeah,
I'm
oh yeah, it's
I'm
already recording.
I'm an old man with weakened capillaries. In fact, but uh,
Yeah.
Well,
probably more due to a dissolute lifestyle than any misstatement on
Uh,
social media. But anyway,
welcome back, everyone, to the Wall Street Silver community. We really appreciate you for coming on. We have a special guest with us, Rick Rule. Rick Rule is an investor and speculator, former CEO of Sprott. Rick, how are you doing today, sir?
life is great. Thank you for having me back. Life seems to be going particularly well at present. Pleasant. So, thank you for asking.
Awesome,
well,
awesome. We're thankful for you even joining us. We also have Jim Lewis and Lee Justo from the Wall Street Silver community. We're going to get right into it. Jim, you want to hit off Rick with some questions?
yeah, sure. Thanks for joining us again, Rick. Your last video with us was really popular, one of our best performing videos ever. You know, you've recently retired as CEO of Sprott since the last time we spoke with you, but you're still a director of the company. But what brought it on now? What brought on your desire? Does a desire for more free time, travel with your wife, and not have a schedule chasing you all the time? What caused the change?
Jim, yes, and yes. I need to say that right now is annual report time. So yesterday I worked for 14 hours, which is rather excessive in retirement. I made a pledge to my former partners, my clients, and other constituents back in 2012 that I would personally see them through the bear market, that I would personally hold people's hands and keep things together through the rough times. I fulfilled that obligation now. You know, I've done what I said I was going to do. And in truth, I'm 68 years of age. So it's time for me to spend more time on the things that bring me pleasure and time on the things that bring me pain. At Sprott, what brought me pain was corporate management and organization and regulated activities. Dealing with the clients I loved, dealing with my partners I loved, dealing with the regulators, although often I like them as people, was less pleasant. And so I've just chosen to do more of what I want to do and less of what I don't want to do. There was a time 2 or 3 years ago when I would have come on to a channel like yours, and what I was able to say was constrained, either because of Sprott's corporate interests or because of the consequence of my being securities licensed. So, and that caused some tension, being unable because of regulation to help audiences. It seemed ironic and was certainly frustrating. I have been able to be much more unmuzzled and unbridled in the last 3 weeks. And I think both I and the audiences enjoy that more.
You know, that's a good point because the last time I interviewed you in February, I think it was, we were told we couldn't talk about any of the specifics of some of the products of Sprott simply because you had offerings that were outstanding at the time. And I get it. I totally respected that. Is that something we can talk about now? How, because PSLV is very popular closed-end fund that we talk about a lot on Wall Street Silver. Can we talk about any of the details on PSLV?
Yes, I'm going to take the view that as long as I disclose that I'm a director of Sprott and the largest shareholder, and hence I benefit from people purchasing PSLV, I'm going to take the point of view that I can discuss PSLV not as an employee of Sprott, which is a circumstance that didn't exist the last time you and I visited.
Yeah. Okay. Well, my first question is, how does PSLV determine, all right, we're going to add 1,000,000 ounces this week? Does PSLV have to trade at a premium to net asset value, and then that enables you guys to issue more shares, and then allows your traders, your in-house traders, to go acquire more 1,000-ounce bars and put them into private storage?
We don't, I would caution your viewers that they should read the prospectus so that they understand the answer that I'm going to give in proper language. We can't trade at a discount. In other words, we can't issue units where issuing units would dilute our existing shareholders. I guess we could do that legally, but it isn't the thing that we want to do to disenfranchise our investor community. to the extent that PSLV generates really substantial volume on the New York Stock Exchange and also exhibits substantial volatility, we can work together with our market makers, Virtue, to monetize the volatility in PSLV on a daily basis. That is the difference between the bid and the ask and net asset value, as an example. The decision as to whether we add 1 million ounces is really a function of demand for the units of PSLV, and also a function of whether we, our traders, and the dealer banks believe that we can responsibly add 1 million ounces. Mm-hmm. As you know from our articles of incorporation, we are not allowed to take deposit receipts or delivery receipts. The only thing that we can allocate to is good delivery physical silver. Mm-hmm. So we have some capacity constraints that our competitors don't suffer from. They have the ability to accept paper silver, as an example, delivery receipts and deposit receipts, and we don't. So in those circumstances where silver is unavailable to us, we are not able to utilize our at-the-market offering mechanism. Mm-hmm.
I want to share something on the screen, and this is something Mike Maloney just had on his show as his tweet of the day yesterday, and it was actually my tweet that made Mike Maloney's show. If anyone wants to go find it, it's about halfway through. But this is one of our members on Wall Street Silver. His name's Ditch the Deep State. He's very popular with it. He tracks incredible data from COMEX about registered versus eligible. And if you see the dotted dashed line going vertically there, that's about when the Silversqueeze started in late January. And you can see what's happened to PSLV's inventory skyrocketing, and COMEX registered ounces started declining dramatically at the end of January, early February. And it's gotten to the point now where PSLV now has more silver in the vault than COMEX has registered. I don't know if you've been aware of this in this type of detail, but this is what our people are tracking.
We are, and I was curious where Ditch got that old picture of me in the background. It seems I've aged somewhat. I don't want to make any comments, particularly on the COMEX, because I'm just maybe less familiar with the plumbing of the COMEX than I ought to be. As you have pointed out, and others commentators have pointed out, with regards to the Sprott Physical Silver Trust, when Eric Sprott designed the trust, and he designed it, by the way, to accommodate his own portfolio. He was the lead order. Mm-hmm. What he wanted to do was eliminate credit risk. He didn't want to invest in an instrument issued by an issuer that, as an example, hypothecated the silver. He didn't want delivery receipts. He didn't want deposit receipts. It doesn't mean that that is a major risk with the ETFs or in other places. But what Eric said is that with regards to his precious metals portfolio, he didn't want to worry about anything. Mm-hmm. And it would seem that there are a reasonable number of people out there who share Eric's point of view. I share his point of view, but also as a Sprott shareholder, I'm delighted with his vision. This is a product that's certainly the hottest product that we have in terms of market acceptance. And I think that the architecture of the Sprott Physical Silver Trust and the architecture of our other physical trusts have been instrumental in maintaining and increasing the reputation of the Sprott brand as a whole.
We had a member actually buy almost $1 million worth of PSLV today.
we saw one $800,000 trade today. So
he posted that on our forum. Actually, his receipt.
all I can say about that is thank you.
So, Rick, I have a question for you. You know, now that you're retired and you're a speculator and investor, has your focus shifted off silver at all? Are you looking into other things? What are you spending your time doing now? Are you doing like some heavy duty research into markets?
I am doing heavy duty research because as a consequence of resigning from any managerial activity, I got a 35% time raise. I was spending 35% of my time doing stuff that I despised. At this time of year, when annual reports are coming out, as I say, yesterday in retirement, I worked 14 hours looking over 25 annual reports. That brings me joy. That's what I got in the business to do. It's odd, but that sort of green eye shade work is what appeals to me. It's what I'm attracted to. The other thing that appeals to me and I'm attracted to is doing this, attempting to educate generalist investors or young investors through my own channel and through other channels. I have found enormous personal gratification in mentoring, and I'm looking forward to doing an awful lot more about that. You know, I regard it, if you will, as a form of savings. Not all wealth is material. Your own sense of well-being and the community's regard for you, I think, is an intangible form of wealth. And I have ignored that too much in my career, and I intend to address that imbalance aggressively in whatever time I have remaining on Earth.
So are there any industries that you're focusing in? Are you still just completely focused on silver? What are you looking to
no, I wouldn't describe myself as completely focused on silver. The successful part of my working life has come in natural resources and also to a lesser extent in conventional financial services. So I'm very attracted to the community banking sector, as an example. Within resources, I'm attracted to silver for two reasons. The first is that looking back 45 years, the most volatile asset class to the upside that I know of in natural resources is high quality silver equities in a bull market. Two, in my experience, precious metals bull markets are of greater duration and dimension than is commonly believed. The first one that I enjoyed went from 1970 to 1981. The second from 2000 to 2011. And a feature that was common to both bull markets is that the markets were led by gold. And silver didn't begin to perform commensurately to gold until the middle and the later stages of that bull market. We're now 3.5 years in, by my counting, to this precious metals bull market. We're certainly in a lull, which is also common to other precious metals bull markets. But my suspicion is that as we come into the middle part of this bull market and then the later sector of the bull market, that silver and silver equities will outperform gold and outperform most other asset classes that are available to investors. I'm not saying that past is prologue, but I think it's much more likely than not that that is true. What I have noticed in particular about the high quality silver equities is that when the capital from the generalist investor comes into space, there simply isn't enough market cap to accommodate them. I remember very much in the decade of the 70s, Coeur d'Alene, now Coeur Mining, advanced in 6.5 years, if my memory serves me well, from 10 cents a share to $65.
Wow.
I remember in the decade of the 90s, which was actually a lousy precious metals market, both Pan American and Silver Standard, very well-run companies, of course, advancing from 72 cents and 50 cents respectively to $45. The idea that I have participated in and in fact benefited from those moves in the past, but makes me particularly covetous towards the end of my career doing it again.
Gotcha. You know, the macro environment for silver and gold just seems incredibly strong right now, but, you know, based on what the governments are doing with printing fiat currencies out the wazoo, trillions of debt, the Fed being trapped at 0%. Are you surprised that we've been going sideways since August, or even in a, sideways for silver, or even in a downtrend for gold?
Jim, not at all. If you look back at prior bull markets in precious metals, what you see is that they exhibit lots of volatility, which is to say they exhibit lots of dramatic cyclical declines in secular bull markets. And what we're experiencing right now is precisely that. I remember back to 1975 in my formative years, the gold price had advanced from $35 an ounce to $200 an ounce in the 1970 to 1975 period. And then the Fed allowed interest rates to rise eerily reminiscent of what we've just seen. And the gold price collapsed from $200 an ounce to $100 an ounce. The economy, used to stimulus, not as used to it as it is now, didn't react well to that. When the Fed lost their nerve, the gold price advanced from $100 an ounce to $850 an ounce. There was an 11-month hiatus in that bull market. There was a cyclical decline in a secular bull market. And the people who got shaken out missed a move from $100 an ounce to $850 an ounce. What you're seeing now, a plateauing and then a decline in precious metals and precious metals equities, is completely consistent with prior bull markets. And it has everything to do with the Fed's decision to reduce yield management, forward yield management. The increase in precious metals prices corresponds very neatly with the decrease in the interest rate payable on the US 10-year Treasury from 245 basis points to 60. The plateauing and the decline corresponds very, very neatly with the increase in the 10-year yield from 60 basis points to 175 basis points. Normal and natural. Your listeners, particularly your young listeners, not the old has-beens by me, but your real listeners, need to understand the difference between two words in English. Inevitable. That means it's going to happen. And imminent, which means it's going to happen in a time frame that's convenient to you. The market doesn't care that you have trauma holding a position over a long weekend. If you are right with regards to the fundamentals, understand that because something has to happen doesn't mean it has to happen quickly.
Rick, I have a question for you regarding inflation, deflation. I mean, there's been quite a bit of debate on our channel, what we're going into. Personally, I see massive asset deflation possible in the near future. If we do enter a period of deflation, what happens with gold and silver? Is it still a good investment?
I think it is. There's no guarantee that it will work, but life isn't about certainties. It's about probabilities. As to inflation and deflation, a couple of comments. One, the Great Deflation that our country experienced, which is to say the Great Depression, precious metals did reasonably well, albeit sort of price controlled. And the benefit was limited to the Treasury. The big thinkers didn't want to share that with the common people, although mercifully many common people found a way to participate outside of our borders anyway. The deflation that you talk about could happen in the context of a credit crunch or a credit collapse. I'm not saying that that's going to occur. What would really drive silver and gold markets would be the policy response to a credit contraction. What we saw in 2008 and to a lesser extent in March of last year is that the Fed will do whatever is necessary, including massive counterfeiting, quantitative easing in their speak, and negative interest rates. They will do whatever is required as a policy response to a circumstance of asset deflation. And it's their policy response, not the market's rate of inflation or deflation, that is good for precious metals markets. Precious metals move well when people are concerned about the purchasing power of their savings in conventional instruments, particularly conventional instruments denominated in US dollars. The most important conventional instrument in the world is the US 10-year Treasury. That's the benchmark security that all other securities are priced against. So you can understand in terms of the intermediate term, the strength and weakness in precious metals prices by juxtaposing that to the nominal and real interest rates paid on the US 10-year Treasury.
You spoke a little bit earlier last time you were on Wall Street Silver, uranium. Why uranium, Rick? I know you're in a couple of those.
I love uranium for a bunch of reasons. The first is I'm instinctively contrarian, and uranium hasn't performed for a long time, so people are bored by it. Boredom is really good for a contrarian, but uranium is better than that. People aren't bored by it, they hate it. When I talk about investing in uranium, I get social media comments that describe me as an ogre, somebody who would speculate in Hiroshima, Nagasaki, 3 Mile Island, and Fukushima. People, in fact, hate me, which tells me that I'm on the right track. You want to compete in a sector where there are no competitors. In the race for uranium, an old, fat, bald, 68-year-old white boy can outrun everybody else because I'm the only guy that shows up to race. I mean, it just doesn't get any better than that. But the arithmetic behind the narrative is compelling too. The uranium, despite the wishes of Angela Merkel and what's that young lady's name from Sweden?
Greta Thunberg.
Yeah, Greta Thunberg, the Nobel economist, the Nobel Prize-winning economist. Despite the fact that they don't like uranium, most people around the world, including most voters and all consumers, when they walk into a room and hit the light switch, they want the power to come on. So in the United States, as an example, 15% of total power generation is from uranium, and 20% of baseload generation is from uranium. Whether we like it or not, we need it. And worldwide, the total cost to produce a pound of uranium, not the cash cost, but adding in cost of capital, prior year write-downs, exploration expense, all that kind of stuff, is between $50 and $60 a pound. So the industry makes the stuff for 50. They sell it in the spot market for 30. They lose $20 a pound, 60-something million times a year, and they try and make it up on volume. This is unsustainable. Either the price of uranium goes up to the price that's necessary for the industry to earn their cost of capital, or the lights go out. Those are the only two choices. Now, the single most dramatic financial event of my career was the uranium bull market, 1998, 1999 to 2006. I was early, but I loved the fact that it was hated. The arithmetic was the same arithmetic that existed today. At the beginning of that bull market, there were 5 uranium juniors that had survived the prior 20-year bear market. The worst performing of those juniors over the ensuing 6 years was a 22-to-1 return.
Wow.
That was the worst. Now, once again, as I said with silver, how would you say, towards the end of my career, I'd like to participate in that one more time. I used to say that bull markets like that were the most fun that you could have with your clothes on. At age 68, I'm maybe saying it's just plain the most fun I could have. But suffice it to say, without damning myself by faint praise, I look forward both in uranium and in silver to enjoying the same sorts of circumstances that I've enjoyed before in my career for the same reasons.
Are there any specific uranium? I mean, I know you're no longer CEO. Can you tell us some specific highly rated Rick Rule picks in uranium?
I'd prefer not to do that because for the next 2 weeks I'm going to be allocating to uranium, and the last thing that I would like on my agenda is to be competing with 60,000 of your viewers. Once I have my position, I'll be delighted to talk my book.
Okay, we'll talk to you in 3 weeks then.
I will tell you this. Yesterday, it was publicly announced that the largest of the physical uranium companies, Uranium Participation Corp., had its management contract purchased by a little group that I know well called Sprott Inc. And we will convert that form of organization from a corporation traded on the Toronto Stock Exchange, if we are able, to a physical trust housed on the New York Stock Exchange, so that the 200,000 investors who have invested alongside of us in gold, silver, and platinum and palladium will have the opportunity to invest alongside of us in uranium too.
Nice.
That's exciting.
It is for me. It's the realization of a very fond dream.
Well, you know what they say, if you can't hold your uranium, you don't really own it, right? So,
because I honestly just started getting into uranium because of the interview we had with you earlier, and I started thinking and doing research, and you're absolutely right. Sooner or later, uranium will have to go up. There's just the fundamentals show it.
The arithmetic around uranium is very compelling. And what I particularly like is that nobody pays attention to the arithmetic because they're so drawn to the narrative, which is usually negative.
Yeah.
I love circumstances where the arithmetic says the outcome is inevitable, but nobody bothers with the math because they hate the narrative. I love circumstances where there's a lack of competition.
I want to get back to the silver and the gold producers. And I've heard your opinions change over time, but at this point in time, what do you think is the best thing to look at? The large producers of gold and silver, the mid-tier, or the exploration and juniors? Where are we in that cycle?
The juniors are ubiquitously overpriced. I've never seen a bull market that went straight from the biggest and the best all the way down to the juniors. Traditionally, I've had an advantage in the juniors because I work harder at them. I have more experience, and at Sprott, at least, I had a very large staff of researchers. But the problem with the sector is it's ahead of itself in terms of valuation. It's still ultimately where most of the money will be made. But at this point in time, I'm not finding the bargains there. In the golds, I'm finding the values in the mid caps, in the 500 to million ounce producers. The ratio of enterprise value to net present value of cash generation at current gold prices is the best I've seen in a 45-year career in the sector. I've never seen anything like this. I'm prepared to believe that if the interest rate goes marginally higher and the dollar goes marginally lower, that these shares could go down for 3 months or 4 months or 6 months. I'm fine with that. This wouldn't be the first time in my career that's happened to me. On the silver side, I'm seeing the best juxtaposition of risk to reward in the highest quality issues. The sort of Pan Americans of the world. Mm-hmm. They are, being Pan American as an example, doing well because of free cash flow generated by their gold business. Mm-hmm. But the latent leverage and optionality, both in terms of silver price, but also in terms of undeveloped pipeline in Pan American, tells me that risk to reward, it's companies of that ilk that you should focus on, particularly because silver is out of favor right now, except on your channel. Mm-hmm. And traditionally, when the generalist investor comes into a sector, they come into the largest and most liquid issues in the sector, which means that you can trade down the quality trail. In other words, you can build a position in the big guys. And when the generalist takes you out of that, you can move your own money all the way down the quality trail in front of the big money, if you follow what I'm saying. So the juxtaposition of risk to reward is certainly the best in the highest quality producers in the silver space. It won't stay that way. Believe me, it won't stay that way. When you see the big guys double and triple in price, the relative value guys will get chased out of those stocks into lower quality stocks. And the price performance of the big companies by itself will reprice the lower quality companies.
Rick, I have a question for you. We have a lot of younger members in our Reddit group. They're kind of learning all about investing space. You mentioned that you read annual reports. Is there anything in particular that you are looking for in those annual reports? And then also to add to that, are there any books that you'd recommend to our listeners and viewers that they should educate themselves about the space and investing?
Yeah, let's take the question in reverse order because that's how it's important. Everybody who listens to your channel, every single person should read several books. The first, the foundation, is Economics in One Lesson by Hazlitt. Too many of your young viewers attended university and had their outlook on the world poisoned by their education. In particular, the various economic texts by people like Samuelson, who basically taught you that communism was good. So read Economics in One Lesson, which will tell you how the world is rather than how the big thinkers think it ought to be.
It's kind of funny. I just got a huge box of those books from the Mises Institute.
That's great.
I'm going to donate them to local libraries.
Yeah, I've probably given out 1,000 of them. After you have done that, after you have a grounding in the way the world works, then you begin the process of learning how to apply the knowledge. And the fundamental book there is The Intelligent Investor by Ben Graham. It is, relative to the effort required to read it, which is low, the best investment book ever written. In particular, the chapters on durable competitive advantage and margin of safety and Mr. Market. Mr. Market was the best chapter ever written in any book describing contrarian investment strategies. I go so far as to say that readers who read the book, The Intelligent Investor, and employ the lessons learned over their lifetime will, not may, will become rich. Interesting statement, if you're willing to do the work. Yeah. If you liked The Intelligent Investor, in other words, if it wasn't an effort to read, but rather a joy, then read Securities Analysis, which isn't, it's the best book ever written if you don't take into account the effort required to understand it, which is high. But it's a superb book. Truly a superb book. I never stop reading it. When I finish it, I start it again. Wow. It's also a cure for insomnia. It's very dense. And then if you liked all of that, there are two more books to read. One, Anti-Fragile by Taleb, which lets you know that bad things happen to good people. It lets you know why storing some of your wealth in gold and silver and hoping that you're wrong as opposed to right is a prudent move. And finally, for me, the granddaddy of all educational experiences, the book that comes the closest I've ever seen to explaining the strangeness of humankind, is Human Action by von Mises. If securities analysis is sleep-inducing, then human action is somnolescent. But at the same time, it has done more to help me understand the way other people act and think than anything I've ever read. So that's the reading part. Sorry for that long-winded answer, but I'm fairly passionate about young people investing in themselves before they invest in the space. In terms of annual reports, once somebody has read The Intelligent Investor, they will be well-versed in annual reports and income statements. You look at things like historic returns on capital employed. What you're looking for is a company that generates retained earnings and has the ability to utilize those retained earnings to reinvest at rates that were similar to the rates that they enjoyed in the past. You are looking for companies that have reasonable returns on equity without employing excessive leverage. You are looking at companies that can employ leverage, but employ leverage with an intelligent balance sheet, which means if you are leveraged, you have to have decent cash reserves. Look too at general and administrative expense relative to assets under management and relative to EBIT. In other words, is your company an economic entity, or is it in fact a salary and benefit scheme for the officers and directors? This discussion of annual reports could be an interview in and of itself, although I fear it would bore some of your listeners to tears.
We have a niche audience, so maybe not.
Have you ever read the book How to Win Friends and Influence People by Dale Carnegie?
I have. I was asked to read that by an early employer who thought that my sales presentations were both boring and caustic. It apparently didn't help.
It's part of your charm. Don't worry about it.
I love the book. I love the book. I will admit that I didn't employ all of the lessons taught in the book.
It's a great book because Warren Buffett reads it inside and out, and I'm reading it right now. So yeah, that's just wanted to throw that out there. Jim, you were saying something?
No, I was going to say you told us you can't talk about your uranium picks because you're in that process right now. Can you talk about any of your silver or gold picks with more specificity?
Give us your
what's highly ranked right now under the Rick Rule scale?
Well, starting for most people with the highest quality stuff, people who aren't involved, even though Franco-Nevada sells at a premium, probably deserves a premium. Start with the best and work down. But the stuff I'm really interested in, given that I've been a Franco holder through 2 incarnations since Christ was a choir boy, I'm buying things like the Australian producer Northern Star, Evolution, a different Australian. I'm buying, coming down the quality trail quite a bit, Endeavor Mining, which is doing a great job in Africa, and SSR, which is in the process of digesting an acquisition. I like companies with great reality and broken stories. I love busted markets where I can see value. In the silver space, I'm attracted to Pan American Silver, as people could have heard. I'm attracted too to the out of favor silver producers. Hochschild's Mining, because people have a reasonable fear of the political trends in Peru. I'm attracted to Fresnillo, which I think is a cheaper way to buy mag. And I'm more attracted to Peñoles, which is a cheaper way to buy Fresnillo. People who buy Peñoles need to buy it with the knowledge that both the political and the social circumstance in Mexico is deteriorating. There are reasons why Peñoles and Fresnillo are cheap compared to their peers. I'm also attracted to Polymetal, the great Russian gold and silver producer. I have less fear of political risk, or perhaps I have more fear of political risks than most commentators. What I have found myself is that people who look like me don't seem to fear risks that come from other people who look like me. Specifically, Western investors seem not to be afraid of money stolen from them in English by their legislature, according to the rule of law. And they tend to fear money stolen to them by darker people in other jurisdictions by other methods more. What I have found is that money that is gone is just as gone. And so while I don't discount the political risk in Mexico or Congo or Peru or Russia, I'm much more afraid of political risk in Ontario, British Columbia, Nevada, and California than other people are. The consequence of that is that I am much more likely to buy, as an example, Russian stocks than many of your viewers might be. It isn't that I'm not afraid of Russia, it's just that I'm so afraid of America and Canada.
Makes sense.
I'm sure you've noticed that countries like Russia have shifted their reserves more towards gold and out of the US dollar. Is that something you want to comment on or have any thoughts about?
I've done the same thing. It makes absolute sense to me. The Russians don't like the idea that we tell them what to do. And they don't like the idea that we have so much moral suasion over the SWIFT banking system that Western economies do what Trump or Biden or some other tyrant tells them to do. So the idea that they would shift their savings, shift their wealth, shift their medium of exchange away from the control of somebody who you might say is an aspiring enemy of theirs makes absolute sense. Were I the government of Turkey and wanted to transact in China, I would be looking for a medium of exchange that wasn't controllable by the US government through the SWIFT system. It makes absolute sense that I would do that. When your young listeners are buying physical silver in favor of US Treasury securities, they're doing the same thing for the same reason. It's not unpatriotic, by the way. America is, among other things, a collection of 370 million individuals. And to the extent that each individual looks after himself or herself and solves all those problems, there are much fewer problems left for society to solve. Looking after yourself is the way that America became what it is. And a circumstance where you're looking to socialize your problems is, from my point of view, unpatriotic and un-American.
So speaking of political risk from a global standpoint, we've had the World Economic Forum come out, clearly state that they're looking to do this whole great reset throughout the world.
Rick's laughing. He's ready. He's winding up right now.
So I'll just let you go here, Rick.
Do you guys read the stuff they send out?
Oh, it's crazy.
Klaus is very commented on among my crowd.
Klaus needs to rebrand himself as the World Narrative Forum. I read all of their postings on LinkedIn, and the thing that's most uniform about their posts over the last 6 years is that the World Economic Forum has never discussed economics, ever, at all. Once a week, probably, I comment on one of their posts, and I ask them about the economics of what they're proposing. The World Economic Forum is not about economics. I would have an easier time commenting on the World Economic Forum if they paid some attention to their stated mandate, but they don't. As far as I'm concerned, they're an outgrowth of the old Club of Rome. Most of your listeners are probably too young to know what they were, but they were neo-Malthusian, big government aficionados in the 70s, people like Pierre Elliott Trudeau, Jeremy Rifkin, Jimmy Carter, well-intentioned morons who believed that they had not merely the right, but rather the obligation to apply their misguided Malthusian theories and their sort of anti-market senses to your life. These people didn't understand that the cure for high prices was high prices, and the cure for low prices were low prices. They didn't like the fact that markets were messy and that they couldn't control the outcome. The fact that they didn't like them didn't change the facts. And I suspect that the World Economic Forum is that same ilk writ large and transported forward 40 years. Mercifully, they were discredited. I remember in the 70s, the Club of Rome hypothesizing that the world would run out of resources by the year 2000.
Limits of growth, right?
Yeah, they were early guys on global warming, and they thought that, the Gulf of Mexico would engulf Kansas City. I'm being a little funny. But they thought that starvation would be so widespread that 40 million people a year would be dying of starvation by 2000. Instead, grain prices fell by half. They thought that the oil price would rise from $30 a barrel in 1980 to $200 a barrel by the year 2000. Instead, it fell by half. The neo-Malthusians forget, first of all, that humans are inventive, creative, that technology advances as opposed to declines. They forget, too, that markets work. The forecasting track record of the Club of Rome was virtually unblemished by success. They got nothing right, not one thing right. And my suspicion is, I probably won't be around then, but my heirs, successors, and assigns, and most of your viewers will be around, that 25 years from now, you'll be able to look at the forecasting track record of the World Economic Forum, provided they ever put anything down by way of numbers. And their track record will be the same, which is to say unblemished by success.
So you mentioned the Club of Rome.
Yeah.
What are your thoughts on Agenda 21, sustainable development, and how much impact is that on our future here?
I'm all for sustainable development. It's just that my definition of sustainable development and theirs are sort of different. I grew up in the mining and the oil and gas business, and some of the stuff that we did in the 1970s was despicable. Truly, truly, truly despicable. I quit a job as a young man as a logger once because we were clear cutting down to stream edges. We were absolutely obliterating these wonderful salmon spawning channels. I was involved in a market, in a mining business where the export of deleterious materials from a mine site was ubiquitous. I came up in an oil and gas business in California where we disposed of contaminated drilling fluids and frankly surplus production on surface. This was horrific. While I don't agree or disagree with the thesis around global warming, I'm prepared to believe anecdotally that it exists. I look at glacial recedents in British Columbia, where I frequently hike, and the glaciers are smaller. I can't tell you why, but the glaciers are smaller. And I absolutely believe that poisoning the commons, which is to say voiding our excess into the ocean or the air, is deplorable. I happen to believe that the commons should be privatized, and I happen to believe that pollution should be dealt with as a tort action rather than as a piece of policy. But sustaining development, I'm all over it. You want to conserve water? How about free market pricing? Like, why do we grow rice in the desert? Why do we subsidize farmers in California to use 12 acre feet of water on an acre of soil to grow alfalfa, which we then subsidize and send to China in containers to subsidize their dairy industry?
Doesn't make sense.
We don't need a shitload of policy around this. We don't need 30,000 pages of legislation. We need a free market in water. If water was $400 an acre foot as opposed to $60 an acre foot, we wouldn't be growing rice in the desert. We wouldn't have a shortage. So yeah, I'm for sustainable development. Sustainable development is called tort, which is where you have the right to defend your property against interlopers, including if your property is the air. And where you have a market which determines the allocation of capital and resources in a service by utility to consumer. And you can print that, by the way, all of it.
Yeah, no, I absolutely agree with you.
I can run all that, everything you just said. Okay.
Yeah, I mean, some of this is going to be,
except for the stuff where he the beginning there.
And don't put in where I said like not for.
Yeah, I mean, if I used a 4-letter word, I'm trying to do less of that now.
Is it? I mean, I'll try to edit. I'm learning how to edit, so I'll try to remove some of that stuff.
Yeah.
But I'm getting better at it.
Yeah,
Right?
no,
Don't worry,
good.
I'm getting better.
Getting better. Smooth.
Hey,
now.
one last thing I want to, I've noticed. I want to get back to uranium just for a second, and then we can wrap this up. I've noticed among the green community that the real environmentalists, and whether they're right or wrong, that's not for this discussion, but the real environmentalists seem to have accepted that the only way to keep the lights on is to have nuclear. Yep. And that means uranium suppliers are going to have a comeback. It's only really the radical extremists that they say no to everything. They have these unrealistic, we can do everything with solar and wind only. And yeah, we'll do something with batteries so that everything still runs at night. I don't find that to be a reasonable, compelling way to run an electric grid. And I think a lot of the green people are coming on board with the concept that nuclear can be done safely, and it's really the only option. If we accept that we have to reduce some CO2 emissions, maybe we do, maybe we don't, but they're coming around to that view. And I don't know, are you seeing the same thing, Rick?
I am. And I would describe myself as a radical environmentalist. I'm just a radical environmentalist of a different ilk than other people who are described as radical environmentalists. I'm a free market, anarcho-capitalist environmentalist, and I don't like the destruction of common goods. Technically, the best source of baseload power in the world from a carbon generation point of view is nuclear. People always address the subject of nuclear waste, which needs to pay attention to, have attention paid to it. When I began to interface with the technical community around uranium in 1999, I visited with several experts on nuclear waste and said, what's the proper way to dispose of it? And what I heard unanimously was, first of all, the volume of waste that's generated relative to the amount of electricity that's generated relative to other types of fuel is low. But the most important thing about the disposal of nuclear waste is that you dispose of it in a place and in a way that you can access it later when technology improves so that you can reutilize it. That was, I was thinking, how do I safeguard myself against it? And the industry was saying, put it in a place where you can get it back and use it again when the technology improves. And I think that people need to understand that. Certainly what you say about the fact that some elements of the environmental community, as an example, Bill Gates, who is technologically oriented, have become stridently pro-nuclear. Bjorn Lomborg from the Copenhagen Consensus, who I think should run the World Economic Forum, is a person whose environmental views are very strong. I would describe him as a radical environmentalist, but he's a radical environmentalist from a cost-benefit analysis. In other words, he wants to get it done in a way that can get done. He too, for the reasons that you've described, is very pro-nuclear.
Well, Rick, this has been a great conversation. You're always a thrill to have on with us, and I want to do it again in the next, as often as I can have you on. I want to have you on. Now that you're retired, let's make this a monthly thing.
I look forward to that. If I may, I would like to renew my offer, particularly to your young viewers. I enjoy engaging in these dialogues, and the easiest way to engage in a dialogue with somebody is to talk about something that they're interested in. And everybody is interested in their own wealth. Any of your viewers, young or old, who would like my opinion on their natural resource portfolio may go to a website, sprottusa.com/rankings. Enter your natural resource portfolio there. Please, no tech stocks. Please, no pot stocks. Keep me to what I can do. And I'll rank those stocks 1 to 10, 1 being worst, 10 being worst. And I'll comment on individual issues where I think my comments might have value.
I will put that link in the description of this video.
Please do. I've been able, I think, to use people's portfolio as a way to teach them many skills, which I hope they'll find valuable over time. An esoteric discussion of benefit cost doesn't go anywhere near as far in capturing people's attention as comments regarding their own wealth.
Yeah,
That's true.
great.
Thank you for your continued championing of the Sprott Physical Silver Trust. It's good for us, and I believe from the bottom of my heart that it's good for your viewers.
Absolutely. Well, we want to thank everyone from the Wall Street Silver community. Again, thank you, Rick Rule, for joining us. We hope to see you soon, everyone. Take care.